Hello and welcome to another update video about Bitcoin around the daily candle close. Really not much to add. It's really just a quick update. Tomorrow, obviously, volatility expected. Tomorrow we also have our member live stream at 5 p.m. UTC. If anybody's interested in joining, check out the membership links in the description. We are going to talk about how to trade a fourth and a fifth wave. Funny enough, we've got here a wave 4 and 5 actually. So more generally, some ideas how you use Elliott Wave to trade fourth and fifth waves. Typically, it's best to trade a third wave, okay? However, obviously, you can trade, there are different ways of trading, different setups. So we want to do a bit of a deep dive into that tomorrow. Besides that, Bitcoin chart hasn't really moved. I think the range is fairly well defined. I would say roughly here between 27K. And then the Fibonacci resistance, which is between 28,050. You can see how the price is respecting that. Again, it's all mathematics. Yeah, the price is respecting these fibs. The golden ratio at 28,060 and 28,300, the 78.6 retracement. Always impressive to see how these are respected, okay? Even though they're really just lines in the air. There are different examples, obviously. I remember here, I think it was this high, where the price also respected the 78.6 fib level up there. Yeah, and that's just what what Bitcoin does in these ranges. Even though it didn't really follow through the bearish setup, yeah, Bitcoin did react a few times this week to Fibonacci resistances and potential short trade setups. They did work out initially. And then the price basically snapped back. So that gives you an idea. If you trade on these time frames, be quick. You have a trailing stop, or move your stop into profit when the setup works, and just be on your toes. That's its so-called whipsaw price action, and it is just characteristic for a market in which the bulls and the bears are fighting. And the market hasn't really decided yet what it wants to do. And to be honest, I mean, we've been in this range now for a little while. We talked about that if we break above, I can't remember which level it was. I think here sort of 27,400 or something. It was a couple of weeks ago. We did say when the price breaks above that level, we're going to enter sort of no man's land territory, a state of uncertainty. And that's exactly what you see here. So we just need to be patient and let the market decide. I mean, we've got a pretty clear breakout point to the upside, which in my opinion is the 78.6 retracement level here, 28,300. Above that level, we are going to look higher in a fifth wave of wave 1, yeah, or of the B wave. That there are different ways how this can be counted, but above that level, we should move close to 30K. And below that level, I mean, I prefer the yellow count still, but I mean, it's pushing against the ceiling. So the yellow count certainly has lost in probability, even though Ether's yellow count looks more probable than Bitcoin's at the moment. But, it is the market that will decide. As I always say, the market is the boss. We know the different scenarios. We know that the market has to decide this. We're in a very well-defined range, up and down, up and down, up and down. The market will decide this, and we have to wait for the signal. That's as simple as that. There is nobody who can tell you, okay, it will break out to the upside, it will break down. Those are all opinions. In that world of different opinions don't help anybody when trading. Okay, you can listen to 10 people, they all tell you something different. Opinions don't matter. What matters is reward and risk, and to understand what are the relevant pivot points, and you can position yourself accordingly. It's also worth knowing that whatever's happening here, be prepared for anything. So what that means specifically for you in your trading, that will differ from person to person, but be prepared for anything. This is not clear price action. We have very clearly defined ranges and levels, and we know where the price should be going if certain levels get broken. But what I can't tell you is, okay, this will happen or that. I prefer the yellow wave count because to me it's a bit clearer, but I'm very open to higher as well. As I said to you, if we get one more high and we have 5 waves up, then we can watch for a more bullish setup. And if we get a 3-wave pullback into support, we can say that here a lasting low has been established on the 11th of September. And then we have a setup that could actually carry us all the way up to 40 to 50K. It's going to be interesting. And as soon as the price breaks above 32K, the FOMO will start. Don't forget that a third wave rally, which would be the next one to the upside, a third wave rally is the FOMO wave. So, that's the wave that many people need to buy, where people are forced to buy higher prices because they haven't used the bear market to build, for example, a core position. So they will panic. Okay. Those will especially be the people who expect another bear market low, which could happen, right? But you want to strategically position yourself in a way that you're happy with both scenarios. It's always easier said than done, but I've said often enough what my strategy is. I'm okay with that, and I know in the bull run I'll be the winner. And if we go lower, I will also use it as a gift, right? I've as part of my portfolio, I see cash as an asset in my portfolio, specifically holding it back for opportunity crashes. And so, it's all a matter of perspective, really. What a chart does could be good for one person and bad for another. So yeah, but not much more to add. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.